Is the San Diego housing market finally cooling down? Hi everyone, it's Deva and Eric with Compass, and we're back to share the latest information with you. Let's look at what's happened over the past several weeks, and then we'll check out the long-term trends.
Okay, so we have the month-over-month snapshot here. We're looking at August to September of this year, and we see a 7.5% drop in new listings, a 10.6% drop in pending sales, and then a 19.2% drop in closed sales. No one was looking for that.
No, thank you.
13.2% increase in the number of homes for sale, partially because of the disparity in pending sales and new listings. And then, as we've been predicting for the last few months, median price is moving now in the negative direction.
Little dip,
2.3% down August to September.
Okay, well, let's check out some long-term trends.
Sure. Okay, so looking at the more long-term trends here, new listings, every year for the last 3 years have just been down and down and down. So we're just seeing less and less homes getting listed, and that's a similar trend with attached and detached properties. And then, of course, year to date, we are off 35.1% for new listings, which is just causing all sorts of issues. And once again, we always take a look at this long-term chart that goes all the way back behind us here to 2012, which we don't need to see, but it almost looks like a very regular heartbeat of the market for many years until you get to 2020, when things just start getting weird, and then even weirder here in 2023. So that's new listings. Now, if we look at closed sales, also wrong direction. And we're down 30.4% from just last year. And that was down 33.6% from the year before that. So closed sales are just falling off the chart. And just this week, in the last 7 days, they've dipped even further to a 30-year low, what appears to be a new 30-year low for a 7-day period.
Stay tuned for your Market Watch episode next week, and we'll cover that.
I will cover it. And it's even more sort of troubling when you think of a 30-year low. 30 years ago, there were a lot less people, a lot less houses. So real estate sales are really at a historic low point here. And year to date, same story with the long-term chart as on new listings. And so looking at the inventory of homes for sale, that is actually up from September of last year by 7%. So that's interesting.
More stuff unsold, more stuff hanging around.
Yeah, and this is due to I think about the last 3 weeks we've seen a decline in pending sales for reasons that we'll talk about in a second.
Wait for it.
Yeah, wait for it. But you look at the inventory of homes for sale historically, and then you see, up 7% from last year doesn't really mean anything, because you look at this dip right here in late 2019. It looks like a cliff.
It does.
It fell off a cliff.
It fell off a cliff. Yeah.
Yeah, it sure did.
And we're laughing, but
well,
what can you do?
What can you do? So median sales price actually up 10.1% from this month last year, but you have to remember that this month last year was down 15% from the high last year. So we have made a nice little bounce back for the time being.
Let's look at the long chart. I like to talk about that on the long chart. Oh,
okay.
I pointed my finger the wrong way.
Oh,
there
yeah.
we go. Okay. Just point all directions. You'll be right one of the times.
Well, looking at the long chart, obviously median price is always up, right? I mean,
the trend, the general trend
is
yes.
up. I mean, you can go back to 1860 and track it.
I wish I had bought some property in 1860.
I wish I'd been there.
I'd be dead now. So
yeah, right.
Maybe not.
I wish I'd been there at Muscle Beach, which is now Ocean Beach, in 1860 to buy up some of those $600 parcels. So going back to 2012, though, median price was down here just below 400. It looks like, which is just so hard to believe. I can't even believe that's true, but there it is. And then, it's gone up and up and up and really peaked out here in the middle or in the early part of 22. And then, like we already talked about,
last fall, homes were getting more challenging to sell.
Yeah.
We had our seller clients offering rate buy downs and other such products, and then it bounced back, and now we seem to be getting into another similar situation.
Yeah, it's. Maybe this is the way it's going to oscillate for a while. We don't really know what the next thing is, but looking at the numbers as we always do, and in a detail that we do, I feel like I can generally tell you what's going to happen in the next 4 to 6 to 8 weeks.
Right. Well, we don't usually make predictions, but
No.
It sounds like you're ready to make one, so let's hear it.
Well, I mean, the trend for median price is, I think, next month it'll probably be down a little bit again, and then after that, I don't know, because I know what's happening right now with pending sales and new listings and closings, which is obviously, to me anyway, going to lead to another dip in median price month over month.
Not necessarily a crash.
No, I'm not saying crash. I'm just saying, it was down 2.3% last month over month, and it'll probably be similar, if not a little steeper, next month. So, median sale price. Well,
Oh, you're going to go to the rate slide now, aren't you?
Why is all this
All
happening?
right.
Why is all this happening?
And this is from Freddie Mac.
Yeah,
This is today's Freddie Mac.
Freddie Mac's 7-day average, right?
Yes.
Yeah. So next week it might look a little less ugly because there's a little bit of downward pressure on rates right now due to world events, but it's not going to be a dramatic,
CPI came out today too, and it wasn't
Yeah.
great. So we'll see how that affects rates.
I think it's probably going to overall be about the same next week, maybe a little lower, but 7.57%, and that's average. Okay, that's average. So. I mean, some people are paying a little less, but a lot of people are paying more. So you're looking at, upwards of a 8% mortgage on a $1 million median detached home. That is just a lot more payment than it would have been when rates were a lot lower.
Well, it's not great, but there are things you can do to mitigate it. We were
Of
talking
course.
to one of our loan officer friends yesterday, and
Yep.
he was showing us a rate buy down sheet. You can pay for a lower rate, and a lot of people are doing that, and it's probably going to become more common as this persists.
Yeah, as the number of homes for sale builds, and that's going to make homes a little more difficult to sell over the next few months, sellers are going to start. I mean, right up until now, sellers have really not had to cooperate because there's been so much competition among buyers. But as rates increase, demand will decrease.
And inventory is increasing.
Increases.
Supply and demand.
Yeah, homes will get harder to sell, which will mean that sellers are going to have to compete a little bit to attract buyers to their properties. So, it's very similar again, like we said, to what was happening last fall. This is what sellers were doing last fall. Then they got to stop doing it around January, February because inventory dropped again, and then all year long it's been a feeding frenzy at every single listing pretty much, and that is slowly grinding to a halt and gonna probably turn more like it was last fall here very soon.
Okay. Well, is that it for now?
That's what's going on.
All right. Well, thanks for watching. If you enjoyed this content, please like, share, leave us a message in the comments, and we'll see you next time.
See ya.